Hey everyone, and thanks for jumping back into the cryptoverse. This is the weekly premium video. I hope you guys enjoy the content. If you're new here, we actually put out two weekly premium videos, one on Sunday, one on Wednesday. So this is the one on Sunday. The major topics of this one are we've added the Avalanche risk metric to the risk dashboard. We're going to talk a little bit about upcoming projects on Cardano. And we're going to be looking at what's going on with Avalanche itself, what's potentially causing some of these moves. So if you guys like the content, again, give the video a thumbs up. Not that it really matters, right? This isn't a public video, but give the video a thumbs up if you guys do like it, so I can get an idea of what you guys prefer. And leave comments down below if you have any questions, comments, concerns, or criticisms. Right, we're all welcome to express our views. So this is the Avalanche risk metric. And again, this isn't necessarily one you can take to the bank because there's just not a whole lot of data on it. But hopefully we can use it to navigate what's going on with Avalanche, what is theoretically possible based on what we've seen in the past, and what's probably unobtainable based on what we've seen in the past. So here's the risk metric. Again, here it is. We'll have it in the newsletter as well. Here it is on a secondary y-axis, the risk, the orange line. So you can see we're between 0.5 and 0.6 risk at the moment, but we are moving up relatively quickly now that the price of Avalanche is over $50. So what we're going to do is I'm going to come back over here and we're going to talk about a lot of things. Okay. Now, the first thing I want to mention is with, accumulating Bitcoin for me over the last several months. Remember, I have my altcoin positions that I'm happy with from 2019 and 2020. I've been accumulating Bitcoin like crazy. I've been encouraging you guys, if you don't have your altcoin positions, that if you weren't around in 2019 and 2020 to get those positions, you can accumulate them today up to say 0.5 risk, moderate risk tolerance. If you want to be a little bit more conservative, you could go up to lower risk levels. If you want to be more aggressive, you could go up to say 0.6 risk or something, okay? Some people feel like they don't have enough Bitcoin, and I know some of them DCAing up to 0.55 risk or 0.6 risk. And in order to see what those levels are, you can just click on the Bitcoin tab and go see what they are. So 0.55 would correspond now to 53.7, and 0.6 risk would correspond to 61.2. So again, you can quickly see what they are just by going over to the risk dashboard. All right. Now, again, a lot of people have been accumulating altcoins. Remember, when we're above the 20-week, altcoins can fly. Okay, so what I said a few weeks ago, again, is if you don't have your altcoin positions, if there's something you don't have and you want to get it into your portfolio, you can just DCA it. I would not bet the family farm on it because it could drop 50% next week, but I would say you can DCA it. Now, the reason we have to talk about that and the reason not betting the family farm is we always have to understand the downside risk, okay? And personally, I don't think we're at a market cycle peak by any stretch of the imagination. I simply do not think this is a market cycle peak. However, we do need to look at what has happened in the past. So there's plenty of reasons that I think we're not at a market cycle peak. With that said, we've seen similar rallies before, and so the risk is there. Right, the risk is there as always, and I know these are not the fun topics to discuss. I have to talk about them. I would not be doing my job, I feel like, if I didn't at least point out the fact that we've seen these types of rallies before that can bounce us off that 50-week moving average. We even saw a wick over here where we saw a 97% move, and then we ultimately rolled over. So again, here, this one so far has been about a 70% move. So this one was 50, this one was about 100. This one so far is about a 70% move. Now, that is why I think Bitcoin still has something to prove, okay? There's a lot of evidence to suggest, whether you look at on-chain metrics, whether you look at, say, like the volume coming into the space from institutions, the data that suggests the cycles should lengthen, even the people that believe in 4-year cycles still contend that the cycle could go on longer. There's plenty of reasons to suggest that the cycle is not over, right? There's plenty of reasons that we would think that. But again, buying Bitcoin for me over the last 3 months is great because I'd be able to accumulate a lot more Bitcoin if we do end up dumping than I would imagine that I could just, I would load up on altcoins at that time. I would top up altcoin positions if in the event that Bitcoin were to dump. But I just wanted to highlight that because we have seen those moves before. So what does Bitcoin have to prove to show that, hey guys, it's not going to work out the exact same way, right? It's not going to be the exact same move that we've seen before. Well, a couple things, all right? The first thing is we'd like to see the 20-week hold. We'd like to see the 20-week hold as support. If it doesn't hold as support, I don't think it's the end of the world. As I told you guys back in May, I think we need 3 to 6 months of consolidation, a lull in the market. We had 3 months here, okay? If we fail to hold the 20-week in the event of a pullback in September, which we've seen pullbacks in September many, many times, if we get that pullback and we go back below the 20-week, then I'm going to just say the same thing, except I'm going to say, all right, guys, I think we might just need 3 more months, and then we should be ready, right? Then Bitcoin should be ready to continue along its journey. If we hold it as support, then we're off to the races sooner. Okay, we're off to the races sooner. So this is this is what we've been discussing. I personally, when I look at these markets and we see 5 greens in a row by Bitcoin, right now we're in a 6th green. I don't know if it's going to close the week like that with 6 greens, but 5 weeks in a row, potentially a 6th week. It stands to reason that at some time within the next 5 weeks, we're going to get a nice little pullback. And that is going to be the major test, okay? What we're doing right now is somewhat irrelevant. Whether we break 50K or not is somewhat irrelevant, in my opinion. We need to actually see if we can actually hold the 20-week as support. And if not, we still want to be cautious, because then we got to look at the 50-week. Because in the unlikely scenario that it is a market cycle top, which again, I don't think it is, but in the unlikely scenario that it is, again, having Bitcoin in your portfolio is a great thing, because it'll help you prepare against the downside risk of altcoins. Okay, so that's what we're looking at. That's what we want Bitcoin to prove. We want to hold the 20-week. If not, we still want to make sure it doesn't come all the way back down to these levels over here. Like, we don't want to see a $10,000 Bitcoin again. Obviously, that would not be good for the market. Altcoins would get absolutely destroyed during that time period. Which brings me to my next point. A lot of people ask me, well, what's like the worst case scenario you could say? Well, I mean, starting with the best case scenario, the best case scenario for Bitcoin is just we don't get a pullback. And we just keep moving up, and people keep waiting for the pullback, and it doesn't come. And if that happens and it goes into price discovery mode, then you're going to be so happy you're loaded up on Bitcoin, right? You're going to be so happy you're loaded up on Bitcoin in the event that that happens. Additionally, in the event that we get a correction back to the 20-week, you're going to be happy to have Bitcoin in your portfolio, because again, Bitcoin dominance likely would go up in the event that we go back down to the 20-week. And if we drop below the 20-week moving average, then again, the Bitcoin dominance would likely go up. So I would say there's a lot of reasons that we can look at it and say, having Bitcoin in your portfolio is great. Obviously, you want to have your altcoin positions as well, so that you have that upside potential in the event that Bitcoin continues to keep shining. Remember, Bitcoin's above the 20-week, altcoins can shine. Bitcoin, it was when Bitcoin crossed the 20-week a couple weeks ago, that's when we saw the alt Bitcoin pairs really start to rally. Again, if you go look at, say, let's go take a look at them. Okay, so there's ADA Bitcoin, and if we go look at, say, like the weekly time frame, remember, it wasn't until the week of August 9th that ADA took off against Bitcoin. And what I said was, guys, with Bitcoin below the 20-week, we would expect alts to bleed against Bitcoin. Bitcoin is below the 20-week that entire time, and ADA bled against it. And then what happened? Bitcoin got above the 20-week on when? August 9th. And then that's when ADA took off. Same thing goes for Avalanche. Again, if you go look at the AVAX Bitcoin pair, when Avalanche took off was right here on August 9th. This was a 18% move, and then a 122% move. So a lot of these moves come when Bitcoin, again, is above the 20-week moving average. So that's the key thing to look out for with these alt Bitcoin pairs. And it bled more or less until then. Okay, so when Bitcoin goes below the 20-week, you expect altcoins to bleed against Bitcoin. When Bitcoin gets back to the 20-week, you can see these altcoins fly against Bitcoin as long as Bitcoin's not putting in new all-time highs. Those are the rules we play by, and we continue to see them play out time and time again, right? We continue to see them play out time and time again. So if you're curious at this point, if betting the family farm on altcoins makes a lot of sense, I would say no, I wouldn't bet the family farm. Again, if you want an altcoin position, you should just DCA it and maybe DCA it up to whatever risk level you feel comfortable with. Okay, I generally stick to 0.5 risk for most of these cryptocurrencies, but that's the point, right? DCA it up to the risk level you're comfortable with, because in the event that Bitcoin does get, sorry, I was on a live stream earlier, in the event that Bitcoin does get that that pullback at some point, you're going to still want to have dry powder on the sidelines to continue to take advantage of that. And again, the reasons I'm still bullish on Bitcoin, a lot of data suggests, like just mathematical models that we put together, a lot of data suggests the cycle's not over. On-chain metrics make things look good. Institutions are continuing to pour into Bitcoin. 60K doesn't really seem like it's going to be a market cycle top. So these are the reasons I think that the cycle has a long way to go. But at the same time, we want to make sure we hedge our bets by ensuring that we are protected in the event of further downside by having Bitcoin. So the worst case scenario that I could envision, first of all, the 200 week is always the worst case, technically speaking, if you go look at what's happened in the past. That's historically been the worst case. And we actually were at the 200 week in 2018, in 2019, and in 2020. If you're curious where it is today, it's actually at $15,000, which would be a huge drop. It's hard for me to imagine us going back to those levels at this stage of the cycle. I do think we will go to the 200 week at some point, but I do not think it's going to happen at this point in the cycle. And I have had people ask me, well, what's like the worst case scenario you could see? Well, the worst case scenario that I could envision would be another shakeout where people who are just going irresponsibly long on the market are going to get completely wrecked, right? Completely wrecked. And what would have to happen, and a shakeout could be on par with what we've seen in the past, right? In December of 2018, we had one in March of 2020. Is it possible we get another one? It is possible, and the worst I would imagine, in the event that the 20 week doesn't hold and the 50 week doesn't hold, the worst I would imagine is a move down to 20K. And if we go to that level, I would say it would more than likely be nothing more than a wick. Okay, it would be nothing more than a wick, in my opinion, and you would want to take advantage of that. Okay, so again, if it happens, be ready for it, right? Be ready for it, and don't fear, don't sell out of fear if it happens. And again, no one can tell you when these moves happen in the market, right? No one knows exactly when those days can come where you see those 50% pullbacks or whatnot. But I'm just saying, if it happens, I think what'll happen is that the perma bears for Bitcoin will likely say victory. But in reality, it'll probably be extremely short-lived and will only propel us to 100K. Okay, sometimes you need those shakeouts to get to the next level, and I just don't know. I don't know if we're going to get that or not. And because I don't know that we're going to get that, it just makes more sense in my opinion. Just DCA, right? Just DCA. Don't worry about don't worry about if that happens or not. If it does happen, then just keep buying the dip and continue to DCA. And then if we go take a look at Avalanche. Now Avalanche has had a pretty good week. Again, it's been doing really, really well, and I wanted to comment on it. It's back above $50. The all-time high on it is $52 or $60 or so. It actually looks like Bitcoin just broke 50K. So that's big news. We just broke 50K. So we will keep an eye on that. It looks like it's moving 50.1K. We'll see how high we can go. But with Avalanche, they recently launched this DeFi incentive program, and I think there's just like a rush of liquidity right now over to Avalanche's network to take advantage of the modest $180 million liquidity mining incentive program. So again, a lot of money is in the space right now. There's this big money ball going from one project to another, and a ton of it right now is going to Avalanche because people are wanting to get these rewards. Okay, so again, you see Avalanche popping off. You see ADA popping off in anticipation of smart contracts, right? And I told you guys a few weeks ago, expect a lot of strength from ADA as we head into smart contracts in September. Now, similar to Shelly, If I had to speculate, I would say that we have a relatively nice move. For ADA, it shows a lot of strength. ADA shows a lot of strength. And again, if Bitcoin pulls back, the valuation of ADA USD goes down, but I'm speculating that it'll still show a lot of strength relative to other altcoins, okay? So if that were to happen, then the speculation I'm thinking is that we show a lot of strength up until the launch of smart contracts, and then once smart contracts get here, I could see a pullback in the market in ADA. Similar to what we saw back when Shelly launched. Remember, like it ADA rallied like crazy, and then it pulled back, and then it just sat flat for several weeks in a row, maybe even a few months in a row after the launch of Shelly. So it rallied into Shelly, and then it dropped down after Shelly for a while, and then continued its run. So I'm sort of envisioning something similar here with Cardano, namely a rally into smart contracts, and then once we have them, everyone's like, wait a second, like, is anyone actually going to use this program? Oh, I don't know if they're going to, or not program, is anyone actually going to use this network? Oh, I don't know if they're going to use it. Oh, I should probably sell, just to be sure. So that's sort of what I'm wondering about with Cardano. I do think people are going to use the network. I just don't know how quickly the market's going to recognize that people are going to use the network, and therefore people might, quote unquote, sell the news. In the event that happens, and you're looking to take some off the table from Cardano, or whether you just have dry powder and you're looking to get into the market somewhere with a riskier play, I will mention a few projects. Okay, now I don't really talk about small projects. You guys know that, but a lot of you guys, I think you'd probably at least benefit from hearing what there is out there. Now, I will say right now, I take no responsibility for any of these projects, right? No responsibility, completely, at all. If you look at Ethereum's network, there's been plenty of DeFi protocols that have gotten hacked and liquidity drained, and people have lost money, okay? People have lost a lot of money. And these projects that are gonna come out on Cardano, some of them, there's a good chance they get hacked. The main thing to look out for at this point is the fact that we have often gotten pullbacks in September that take us to the 20-week. The other thing to be on the lookout for is the fact that we've seen bounces off the 50-week before that did not ultimately hold, right? And having Bitcoin in your portfolio is a good hedge if it doesn't hold, right? Having Bitcoin in your portfolio is a good hedge if it doesn't hold. And this is a good reason not to just YOLO everything into altcoins. It doesn't mean you can't DCA them, but I would not YOLO everything into altcoins, considering that we've seen these types of bounces off the 50-week and they have not held in the past. Now, again, we can always say this time's different. Again, there's a lot of evidence to suggest that we should ultimately trend higher this cycle, but I don't know if it's going to happen now or if it needs to happen a few months from now, right? I don't know if this is it. Because I don't know, that's why we DCA'd, and we DCA'd from 30K up to 41K, back down to 28K, back up to like 30 something K, back down to 29K, and then all the way up to 46K. But then now the risk metric on Bitcoin is 0.522. Last week, the Bitcoin risk metric was over 0.5 and I didn't DCA it, but later that Monday, it went back below 0.5. So I picked some more up, right? I picked some more up later that day. So again, if it's below 0.5, I'll buy more. If it's above 0.5, I'm not buying. Right now it's above 0.5. For it to go back below 0.5, we would need to go down to less than 47K. All right, so we'd have to drop around $3,200 at the time of this video. But again, the risk levels are dynamic. They will continue to change, and we'll see. We'll see how far ultimately this bounce will go before we actually get a nice pullback. Because I know a lot of people are just assuming we're just going to go straight up without any consequential pullbacks. We most certainly will have a pullback at some point. We've seen, by the way, pullbacks, we've seen bounces off the 20-day. Many times, and a lot of times they can take us 15 to 20% up, right? 15 to 20%, that's what we said in the past. And this one, so far, is about 14%. 15% would take us to around 50.5K. 20% would take us up to around 52.7K, okay? So we've seen those types of bounces before that are 15 to 20% bounces before you get another pullback. Here was a bounce right here. That one was actually even more. From the 20-day, it was about 21%. We've also seen many other bounces like this one off the 20-day right here. Took us up about 15% from the candle, and if you measure it from the wick, about 21%. So these are moves we've seen before. I bounced off the 20-day, and again, if it's a 15 to 20% move, it'll take us to 50.5K up to maybe around 52.7K. And my speculation, again, is very dubious because I don't really know what's going to happen in the short term, but I would guess that we're going to go back into the 40s at some point, whether it's August or September, I don't know. But I would assume, I would guess that would happen, because it seems like these types of moves where we just go up 5 weeks, 6 weeks in a row, we do need a healthy pullback at some point. If we go look at what sort of happened before, this one over here was 1, 2, 3, 4, 5, 6, 7, and then we sort of just went sideways for like 2 or 3 months, right? Long consolidation, not super long, right? Not like 8 months consolidation, but 2 months of going sideways at those levels. Again, here was a 4-week move, and then we came back down. Here was a longer one, 1, 2, 3, 4, 5, 6, 7. Okay, so this was 7, and then we consolidated for about 3 weeks before continuing that move. This one so far is 5, and we're currently in the 6th one. So we opened this week at 49,291. We're currently at 50.2K or so. So right now we're in the green. Obviously, I don't know if that's gonna sustain. If it does, and we close the week with 6 greens in a row, then we're gonna be going into September. We'll be going into September, which historically is the worst month, I believe, for Bitcoin in terms of your ROI. We'll be going into September with 6 greens in a row, which probably would, it seems like that would merit a pullback, right? It seems like that would, merit some type of a pullback. 6 greens in a row, going into historically like the worst month for Bitcoin. Maybe we get a nice pullback, and at that point, we would like to hold the line in the event of a dump to the 20-week moving average. And if we do hold the line, then again, probably time to get on your metaphorical laser eyes in hopes for 100K Bitcoin. So that's what we're sort of looking at the moment. Again, if you're looking at DCA, continuity DCA, I think Bitcoin's off the table now because it's above 0.5 risk, unless you just simply want to take on more risk. We have the Avalanche risk metric added. Again, the risk confidence is not very high just because we don't have a lot of data, but according to it, it's now at 0.61. DOT and Link are the lowest two, with DOT at 0.46 and Link at 0.439. ADA is approaching 0.5. Okay, so ADA is approaching 0.5 risk. So if you're still getting your position in ADA, I would not continue to chase it. Personally, I would not continue to chase it after 0.5 risk. Link still has a ways to go. DOT still has a ways to go. Ethereum is still technically below 0.5 risk, but again, they should be the lowest DCA levels because they're between the 0.4 to 0.5 risk band. They're not like the 0.3 to 0.4 or 0.2 to 0.3 or 0.1 to 0.2. They're at that highest level before you cut off the buys if you're following the moderate risk tolerance approach. So again, right now, Bitcoin is still above the 20-week by about 15, 16% or so. With that in mind, even if Bitcoin pulls back 5 or 10%, as long as it's above the 20-week, we know altcoins can continue to rally. So even if Bitcoin were to get a pullback in, say, like the next week or two, I would still contend that ADA could still do relatively well, right? I would still contend that ADA could still do relatively well relative to other altcoins going into the launch of smart contracts. So it's all about Bitcoin being above that 20-week moving average, right? That's what we want to see. We want to see Bitcoin above the 20-week, and if we do see it above the 20-week, then we know that a lot of these altcoins can continue to rally. Obviously, right now, ADA is on fire. Avalanche is on fire. It makes sense. Avalanche has this $180 million liquidity incentive for DeFi, and then ADA just has some of the best marketing. And I mean, with the launch of smart contracts coming out in just a few weeks, it's a great thing for people to sort of buy into, right? Buy it, and then once you get the release, all right, now what, right? And then you kind of have to pull back a little, probably figure out, okay, who's using it? Oh, people are using it. Okay, let's keep going up. Or if people aren't using it, it might send the prices lower for a little while until people are actually using it. I do think people are going to use it a lot, but it might take the market a little time to actually realize that, right? It might take the market time to realize that. So hopefully this video has been useful. Okay, we've covered the Avalanche risk metric. We've added it to the risk dashboard as you guys requested. It is now here. Again, the risk confidence is relatively low on it, okay? It's relatively low, so I don't think these are ones you can take to the bank. If you want to know how I'm navigating the market, with Avalanche and Polkadot, I just accumulated my positions last year, and I have not touched them since. And I don't have any intention on touching them probably for another 1 to 2 years, to be completely honest. I'm earning interest on them, and I just simply don't care about the short-term moves. Now, again, I don't treat all of my altcoins or cryptocurrencies like that, because if you did, it'd be a terrible strategy, because at some point, the market will dump 80 or 90% more than likely, and you're going to wish you had taken profits. And I'm hoping I can come relatively close to timing a good exit on these projects, but it's always possible that I miss it, right? It's always possible that I miss it. And therefore, it doesn't make sense to apply that strategy to literally every single crypto. So the other cryptos, I stick to the risk metrics on. I just picked Avalanche and Polkadot, so just let them ride. Right? I mean, my Avalanche tokens, most of them are locked up anyways. Through staking, so I can't even touch them anyways. And with Polkadot, again, earning 12% APY, that's good enough for me. I don't really care what the price does. If it goes up in the short term, great. If it goes down in the short term, even better if you want to continue to establish a position. So with DOT and Avalanche, letting them ride, not doing anything with them. With the other projects, I generally do take profits so as to not operate too deterministically about anything. But if you're going to operate deterministically about anything, it should probably be that Bitcoin will trend up with time, but of course it will not do so monotonically, which means it will not just continuously go up every single week. There will be pullbacks, and we will test the market. Probably we will test the 20-week moving average and see if we're strong enough to hold it. We have not been strong enough in the past to hold it. My speculation is that we either hold it on this attempt or the next one. Okay, so that's my speculation. We hold it on this attempt or the next one. If it doesn't hold on this attempt, then it could be another 3 months before we test it again. But that is my general speculation on the markets. Just trying to cover all the bases here because it's been a pretty eventful week. The Bitcoin dominance. This is an interesting one to look at because, again, going into May, I said, guys, hey, with Bitcoin going below the 20-week, we expect the dominance to move up. It has been generally moving up, but ever since Bitcoin got above the 20-week on August 9th, we've seen the dominance come back down. And if Bitcoin continues to just chill below the prior all-time high, then there is a good chance that the dominance could break through this and come back down and maybe test these levels again at around 40%, right? There's a good chance that'll happen. I would speculate, as I said in the Telegram chat many times, that the dominance of Bitcoin will likely go up significantly before the end of the year. Okay, I don't know if it's going to go down first, but I would argue that it's likely to go up, above 50% before the end of the year. Whether that happens now or in September or October, November, December, I don't know. But that is what I would speculate on Bitcoin, that the dominance will go up as it regains some level of control on the market, and a lot of other cryptocurrencies will probably just kind of sit back and watch what Bitcoin's doing for a while. If it's going up, right, they'll sit back and watch, and if it's going down, the altcoins will just bleed against Bitcoin. So that's how I see the market. Thank you guys for tuning in. Leave some comments down below if you have any questions, and I'll try to get to those, and I will see you next time. Bye.